All right, what's going on, guys? Terry James, mortgage loan officer with over 15 years of experience in the mortgage industry. I wanted to share some information with you guys so that we can actually see and start diving into, I get a lot of people who saying, hey, I want to fix my credit before I apply for a home loan or try to get a home, and we're not talking if you're approved, because FHA guidelines typically is 580 credit score. Conventional is 620. And so I know a lot of people are in those boxes, but they keep saying because, I want to have 700 or I want to get to 800. And so what I wanted to do is show you exactly what it looks like if you have an 800 credit score versus a 620 credit score, or even a 580 credit score. I want to show us the difference so that if you're thinking about, you're wondering, should I keep waiting and keep trying to fix my credit, and you actually have credit that can buy a home right now and you can get approved for a home loan right now. Let's show in, and I'm going to show you how, what it looks like and what the difference is on that. Okay. So we understand, should we keep waiting and does it make sense? So let's dive into it. I'm pulling numbers out of the air. We are going to pull just Google from there. This gives us a rough estimate, kind of where the rates are. So I love my 500,000 loan amount. If you guys follow me, I love to use that. So we are going to start out, and this is just online. All I did was Google search mortgage rates for a down payment. We are going to bring that down to about 3.5 or 3%. All right. Now, so what we're going to do now is simply for the credit score, because like I said, this whole thing is about everyone wanting to wait. Like, hey, I want to wait to fix my credit. So let's see what the real impact is. So let's say you have a 620 score, which conventional, which means you can actually get approved for a home loan at 620 going conventional. So at 620, your interest rate is going to be 8.287 on a 30-year. Okay, so these are some rough average numbers. We have our state in California. That's pretty much the rate that you're going to be looking at going conventional with 3% down, 620. Okay, now let's say you drop that down. We're going to go up to 800 because, like I said, people want to wait. Hey, I need to fix my credit. Let's see what the impact is. So at 800 and up credit score, we know the highest you can get is 850. So anything above 800, you're getting the premium pricing. The 30-year rate, average rates today, February 17th, 2023 is 7.025%. Okay. Now I'm going to show you the breakdown payment wise of exactly what that looks like and how that affects your payment, and does it make sense to really wait to fix your credit. All right, so what I wanted to show us is that, yes, the interest rate, if you have a 620 credit score, for example, and you're saying, I want to wait. Well, listen, right here. So this is what we're looking at, that yes, today's interest rate. Now, granted, these may not even be the rates or they're ballpark numbers of today's rates. But what I wanted to show you, what's important is, by you simply waiting, yes, your rate is going to be dictated upon your credit score. So yes, you are going to pay a higher rate the lower your credit score. But what I wanted to show you is that real quick is, as you can see right here, is that yes, your interest rate, if you have a 620 and you're saying, I want to get it up to get my payments lower. Okay. So your difference is going to be about $434. Okay. Now, over the first year, let's say it's going to take you, you're saying, hey, I want to work on my credit for the next year. Okay. So you're going to spend, if you buy today, you will spend probably about an extra $400 than if you had an 800 credit score. Okay. That's the gap we're looking at. So you're going to spend about an extra $5,000 waiting. So you say, I want to wait. I want to save, or you want to save extra $5,000 to get your credit score up to 800. I'm going to keep working and get it up so I can save that $5,000. It sounds good. But right here is where the big difference is. What's important is that your home price you're looking at. Now, the loan amount is $500,000, but the home price, okay, with 3% down, your home price is going to be about $520,000. Now at 5%, just 5% increase, which is average in California year over year, home prices go up about 5%. That's very minimum, that's average. So California real estate, you are going to pay $26,000 more by simply waiting 1 year to try and save an extra $400 in payments a month. So does it really make sense to wait and build your credit and say, hey, I want a 700 score? Now this was going to the highest score. So the difference in your payment from going from a 620 to the highest credit score, 800 and above, which means you're getting premium pricing. The difference, we're only talking $300-400, okay? But the benefit is if you get in now, it's going to save you well over $20,000, $25,000, $30,000 depending on the price of the home by simply buying the home today versus waiting in a year. Even though some people think, the market's crashing, we'll talk about that later. I'll address that. But these are some real numbers that I think we need to look at. I've gotten that and had conversations this week talking about, hey, I want to keep working on my credit. I'll come back once my credit is right. And I keep telling people, if you can be approved for a home loan today, you need to get a home today. It doesn't matter what your credit score is. If you can afford that payment, do not wait. Get in the home today, especially if you're here in California. California real estate year over year goes up a minimum 4, 5, 6, 7%. This is over 30 years, California real estate. You can look that up. Once again, you can Google that. But if you have any other questions, DM me, contact me.